Nvidia stock is down over 17% today. It is trading under its 200 simple moving average for the first time in 2 years. But instead of panicking, I went and bought $10,000 worth of Nvidia stock today, and here's why. First off, my average cost is $120.11 per share. I bought right about here in my investing account, which is with Fidelity. So I'm already down about 1.5 points. Feel free to laugh at me. Before we can dive into my personal reasons for buying the stock, we first need to understand why Nvidia is dropping in the first place. A Chinese AI company called DeepSeek has come out with their own AI app that people are saying is just as good, if not better, than ChatGPT. And the major kicker here is that they were able to make this app for only $6 million, whereas companies like Nvidia, Google, Meta, etc. are approaching $1 trillion in their AI builds. So that strikes immediate fear in the market based around the efficiency of these American artificial intelligence companies. And of course, Nvidia being the leader in the American artificial intelligence space, it is taking the largest hit. And listen, Nvidia is the embodiment of a growth company. Even with this hit today, the stock is still up 91% in the past year and still up over 1,900% in the last 5 years. Even with the hit today, they are still trading at 47 times earnings. There are value stocks and there are growth stocks. A growth stock, as Nvidia is up so much because of its, for lack of a better term, growth, rather than actually being near its value multiples. For instance, Nvidia is currently trading 31 times sales. It's currently trading 53 times its book value. Warren Buffett has been famously buying shares of ticker OXY. This ticker is trading at 1.7 times sales and 1.7 times their book value. This is a value stock and the kind of things that investors like Warren Buffett would teach you to buy. However, let's take a look at the revenue chart of Occidental Petroleum over the last X number of years back. Look at how, yes, maybe growing, it kind of goes through waves. It's largely stagnant, largely sideways. This is very typical of a value stock. Now let's compare that with the same chart for Nvidia. Look at how this thing is, once again, for a lack of a better term, growing. Its revenue is exploding over the last 1.5 to 2 years. Of course, looking at the Nvidia price chart over a similar time frame, it has also exploded. I think a lot of beginner investors get caught up in purely the chart, because if you just look at this, you would think, wow, this thing is way too overextended, it's due a crash. But just compare this chart to the revenue chart that we just looked at. It is backed by real numbers. It is backed by real growth, is this move in the stock. But with great growth opportunity comes great risk. The major pitfall of growth companies and why value investors like Warren Buffett tend to stay away from them is that since they are trading at those high multiples, they don't have that ground level of value there to catch them if something bad happens. So Nvidia is down so hard because a Chinese company seems to be able to create AI apps more efficiently than them, and since they are a growth company, they are getting hammered. Great, now let's begin to talk about the reasons why I decided to invest $10,000 into this dropping stock today. Reason number one, I'm just going to bring back up the revenue quarter over quarter chart for Nvidia. I believe in this story. I like this story a lot. I'm going to be looking for opportunities to buy dips on growth stories like this. And even more specifically, I want you to take a look at the actual numbers here. So for the Q2 earnings report on Nvidia, they reported just north of $30 billion in revenue. The Q3 report was $35 billion in revenue, and the expectation for the upcoming Q4 report is $37.5 billion. Noted that on every one of these earnings reports for the last year plus, Nvidia has crushed the expectation. So I would once again predict that they are likely to come in even higher than this number. So back on the chart, here is your Q2 earnings, here is your Q3 earnings, and of course, we have fourth quarter earnings upcoming. Remember the revenue on the Q2 earnings? It was just barely over $30 billion, and we grew in quarter three, and the expectation for quarter four is at $37.5 billion. Back on the chart, let me come in and extend to the left my line that I drew at my entrance price today of 120.11. You're telling me in Q2, the revenue of Nvidia was reported at just north of $30 billion, and in Q4, the expectation is $37.5 billion. That is a 25% increase in revenue over 2 quarters, and you're telling me I can buy a stock with that story at the same exact price that the stock market was valuing it at that original $30 billion revenue number? It just seems like a good idea to me. This is the site for DeepSeek, the AI app that the Chinese company created, apparently much more efficiently than Nvidia did. It is currently on DeepSeek v3. According to Wikipedia, DeepSeek v3 came out in December of 2024. It doesn't say the exact date, but today is January 27th, 2025. So it is over a month ago did this new version of DeepSeek come out. From what I can gather, and this is all happening today, just a few hours ago, so I'm sure the story will develop further depending on when you're watching this video, but from what I can tell, why the market is reacting to this news today on a version that was released over a month ago is because a venture capitalist from a market research firm sent out an email. Do I want to tear down the entire narrative of the Nvidia growth story because of a email from one market research firm? I don't, and I'm not saying this isn't real. I'm not saying it's impossible that DeepSeek is going to be the next big thing and take over. It's possible. Anything is possible. I could be completely wrong in this, but what you have to do in the stock market when making investing decisions, when deciding when to buy stocks, is you have to measure the pros and cons. Right now, the pro in Nvidia is maybe one of the best growth stories of all time, and the major con is an email from a market research firm. I like the pros versus the cons. Let me also zoom down to this part. I find this really funny. So this is Liang or Lang. Sorry, I'm not good at pronunciation. This is the founder of DeepSeek. He had previously bought a stockpile of Nvidia A100 chips, a type of tech that is now banned in China. Those chips became the basis of DeepSeek. The damn thing is built with Nvidia hardware, or at least copying Nvidia hardware. The whole argument is they did it more efficiently, they did it cheaper. No shit, they did it cheaper. He didn't have to develop his own hardware. He just copied what Nvidia already made. Everything in the stock market happens for a reason. Nothing is random. And I am very, very far from an expert on the artificial intelligence field. So maybe I'm completely wrong. Maybe this DeepSeek thing is real. Maybe this is the beginning of the end of the American AI bubble in the stock market, and Nvidia is going to come down much lower from here. All I can say, I like the growth story of Nvidia versus this new Chinese company, and I love getting to buy this growth story at the same valuation it was when the current revenue of Nvidia was 25% lower. I very much believe that Nvidia has been up for so long that a lot of investors are looking for really any reason to sell. I've seen this happen a lot over my 9-year investing journey. Stocks that are extremely blown up like this, excessively overreact to bad news once again because investors are looking for any excuse to lock in that profit. I would like to be there to scoop up this fear on this amazing growth story. And the $10,000 that I put in is a very small amount of the cash that I still am sitting on in my Fidelity account. If next week Nvidia is trading sub 100, I'll be buying more. Funnily enough, this thing has dipped so hard, it is now below its 200 simple moving average, so my active trading reversal trading strategy won't even be looking to buy this thing, which might be good since I'm investing in it long term. No need to double dip, right? But throughout this video, if you've been looking at this indicator in the bottom of my chart, or if you are now interested on the strategy you see running on the screen, or this custom backtest study you see up in the top corner with the labels for win percentage, average trade, drawdowns, etc., they, along with over 90 plus other custom thinkorswim codes, are available over on my website, daytradingstrategies.net, linked in the description down below. All of these codes are extremely easy to import into your own thinkorswim application. Every single one will come with one of these share links. All you need to do is copy that link, set up in the top right of your thinkorswim application, open shared item, paste, preview, and import. And just like that, whatever you imported, be it a study, be it a strategy, be it a scanner, they will all be available forever within your thinkorswim platform. For instance, I just imported the DTS Bollinger Break. All I need to do now is add that study to my chart, and you can see those arrows being plotted here. So just go check out the website for me. Once again, click the link in the description down below. Read the reviews, look at the prices, decide if it's something that can help accelerate your trading journey. If you all enjoyed this video, it's a little bit different. Normally, we on this channel focus almost exclusively on those custom thinkorswim codes, but this is a pretty major kind of market day with what's going on in Nvidia, and I decided to invest in it, so I thought it would be a good day to walk through how I make my investing decisions. If you did enjoy this type of content, please show me that by hitting the like button. If you would like to continue learning, make sure you subscribe to the channel down below. With all that being said, I'll catch you all in the next one.